Good afternoon, ladies and gentlemen. It is Wednesday, the 2nd of June, 2021. This is episode 13 of Hindsight, where we learn to be a better trader. We're going to take a look at things that happened today, what could have been done better, what opportunities there were, what could have been taken. And of course, it is the start of winter, so things are a little bit frosty on the ASX as we head into the end of financial year, where selling tends to outweigh buying and liquidity is a little bit lower than usual. We're going to take a look at three different stocks: ATX, Fortescue, and ESR. We're going to start with ESR today, and this one was a nice big gap up on the back of 7 meter intercept of copper. I think it was copper intercept of some sort, and really it was 50 mil market cap company. The news wasn't that significant, but what we ended up seeing was a nice big offload of shares at the top here, and I'm going to talk you through something that I spotted in this stock, and it's something that I've been talking about a couple of weeks ago. And that is spotting and identifying a new level of market spoofing and arguably market manipulation. This is something I haven't seen pre-COVID. And before I get into that, I just want to say I got in on match on this one. Took a one tick loss early, 8.4, got out at 8.4, then got in at 8.5 and sold out at 8.3. So 2 losers, 1 break even, kept it really tight on ESR. But I do want to talk through the bot manipulation that went on this stock. And just for reference, I'm not going to complain about the bots. I'm not going to say they're responsible for my loss, but it is worth noting and pointing out what's actually happening on the markets, because this is a new trading environment. Things are different than pre-COVID. In pre-COVID, let me talk you through what the bots looked like. This is the order book. Would have maybe a 1 mil stack at 8.2 and maybe a half a mil stack at 8.3 with plenty of padding in between for the bot to pull out if things got too close. You know, the selling got too close to its order, it'd pull out, or it'd adjust its order down to a different level below. And that's pretty much what old school spoofing was. It was obvious, it was clear as day that it was fake. But what we have here is what I consider next generation spoofing, and let's take a look at it now. This is a few minutes into the open, so volatility is still high, liquidity is still high. And we're going to see 8.4 here in just about 1 second here is going to get taken and then stacked with 2 mil shares. Boom, taken. Does that look legitimate to you? Because it does to me, right? We've got an order that came in, took out 67K, which is 800,000 shares worth, and stacked the bid at 2 million shares. To me, this looks as legitimate and normal as possible. Next, we're going to see in the next 30 seconds, 8.5 is going to have about $27,000 worth or 350,000 shares at 8.5 get taken, and then 2 mil stacked on top. And this is what makes these bots and algos so fucking scary, is because they're sitting at the front of the queue. This 8.4 is sitting at the front of the queue because it looks legit. 8.5, there it goes. We've got 32K, 380,000 shares. I believe that was meant to be 350,000 shares. I think that might have been 2 orders there. But the point is, we now have 2.2 mil at 8.5. So we have about 1.2 million shares that flowed through from both 8.4 and 8.5. We can assume these are roughly the same buyers. Let's just assume that in this instance. It's hard to tell if they are, but the way they act is extremely similar, and you'll see when they get sold into, they act also extremely similar. Now, keep in mind, there's 1.2 mil shares that these two have bought together. My assumption is that they're going to offload into 8.6. Keep in mind, watch how many orders go through at 8.6. We currently have 900,000 shares at 8.6. We'll end up with about 2.5 to 2.7 mil churned at 8.6 in the next minute or so. So I'm going to speed this up a little bit. Nothing really happens at 8.4 and 8.5. It stays stagnant. It's all about the 8.6 at the moment. You'll see how much flows through, how many orders flow through. We got a stack and reload, stack and reload. I think it reloads about 2 or 3 times. So this is the second one. And you can see the orders are all just retail dollars flowing through. There's the third one, and we're going to get stacked again on the sell side, and that should be the final one. Now keep in mind, 8.5 was sold into with 333 shares. I'm speculating here that there is a minimum criteria for this bot to be pulled. So $1,000 won't do it, $2,000 won't do it, $5,000 might do it, but we'll see the moment 8.5 gets hit, right there, 8.5, it gets hit with 240,000 shares, which is $20,000 worth, 2 million shares pulled. Or what's left of that 2 million shares pulled. 8.4, the exact same situation. 8.4 gets hit, pulled. We have 210,000 shares or $17,000 worth and instantly pulled. So these bots look like they're designed to stay first in queue and take orders, stay first in queue in order to put pressure on the buy side to offload at the next line or two. So in this case, 8.4 assumingly offloaded its shares to 8.6. 8.5 also offloaded its shares to 8.6 while stacking both bids, right? Both of them looked legit because the fact that they actually took orders, right? Pre-COVID, the bots never touched orders. Never. They never took orders. There'd be a manual execution, right? The broker or whoever it is would buy in, buy, accumulate, then trigger the bot to cause the buy pressure and then sell into that buy pressure. That's old school bot strategy. This is something different. This is brand fucking new. So, again, not blaming the bots. This is part of the game. It's worth being aware of what's happening because this shit makes things a lot fucking harder to trade. So, that's ESR in a nutshell. Didn't do well. Fortescue Metals, this gapped up quite a fair bit on the back of iron ore. I think it was up 4.5% overnight. Someone said 10% overnight, but I couldn't quite see the data for that one. I was looking at the Dalian iron ore exchange. So, I, in hindsight, probably should have taken this short here when it happened. I ended up closing my long position that I had from somewhere around here. Held onto it. Was looking for the break of VWAP to the upside. Instead, ended up the moment this trend line broke is to close out. I think I ended up with like a pip of profit or something like that, maybe 2 ticks of profit, barely. Long story short is didn't catch the downswing on this one. I was preoccupied with another stock that I was looking at, but I did end up coming back to this one and catching this move here. So we have this pivot point here, this level came back down, and I spotted this action here, failed to move, failed to break, create new highs. And this is where I took the short. Someone pointed it out to me at around this price here, 23.46. I should have taken the short a lot sooner, but I ended up taking it at 23.40, so it was pretty late. That's, poor decision making, I guess. I think I was just trying to process what the stock was doing. And look, I ended up in profit on this one by about 10 ticks. I had a stop loss for 1 tick and loss, got to 23.39 from memory, not 23.40, and then came back down. The plan was to close this out into strength. So once it broke that horizontal, just close out into strength. I was happy with 10 ticks of profit. Close out most, I scaled out here and took some out on this candle here as it was starting to shoot to the upside as well. So 10 ticks on average, I was quite happy with that. I mean, look, it could have been better. There was better opportunities obviously out there, but for me, I haven't traded Fortescue in so long. If we bring up the daily chart, I mean, it's been a while since I traded Fortescue. I guess the volatility is still there, and I don't know why I've stopped trading. I think it was just a little bit too expensive, and yeah, I guess I should look at it, pay attention to it more often, to be honest. There was a good opportunity there, and I just didn't take it. ATX was the next stock for me that I traded, and this one I caught on a little bit late after the first pump. However, I did catch the pullback here. So we had a rally on the back of what I found out to be some sort of pancreatic cancer news, I think it was. I wasn't too fussed about it. The market cap was relatively low. From memory, it was around the 20 million mark, 25, maybe 30 mil off the top of my head. So it was a nice low market cap stock with what sounded like a good headline, and that's all I cared about. Was the good headline. I did catch the pullback. I was interested in the reversal back to the upside. So I ended up getting maybe 28.5 average, 28.7. The idea was to sell into strength as it goes above and creates new highs, because this move was, or the idea actually behind this was the pullback was on much lower volumes than the rally. So nice rally on strong volumes, low volume pullback, good opportunity to buy. This was classic textbook trading for me, this stock. Everything went perfectly and swimmingly. I didn't trade in big sizes or anything, but I didn't need to. I still got really good coin out of it. Just trading a few $1,000s worth, or really ended up being about 10 to 15,000 shares on this one. That was roughly the parcel size, and yeah, it still made really good coin because the percentage gain was just so high for this one. So really, every tick mattered, and it was good. It was really good. So what I was looking for there was really to sell into strength, and of course these candles came scaling out as it gets above this level here at 310, and then waiting again, low volume, and of course this setup happens. This pullback happens. Ended up getting at 29. I kind of did like the opposite of front, or rather I took a front side, basically front side long, if you want to call it that. I don't think that's the correct terminology, but yeah, took it at 29 and was okay with that. Saw stagnation here at 31, sold it at 31 as well. Didn't really go anywhere. Was struggling to break a high here, and of course there was massive volume churn. So what happens when you got volume churn as it's or rather when it's failing to rise? It's never a good thing to have volume churn and not have the stock price rise. Here, high volume, stock goes up. High volume, stock goes up. Very good volumes, stock goes sideways, right? It's distribution, it's no good. And I was looking for this crummy looking trend line again, was looking for a pullback. Ended up getting this. I can't actually remember the price that I got it at. But the idea was to sell it into this trend line or sell it on the way back up to this horizontal here. So sorry, my memory fleets me, but I'm almost certain it was 28.5. Waiting for the volumes. I probably got some confidence from this volume here. So 28.5. Took it all the way back up to 31 and was really happy with that as well. And then it was a matter of spotting this trade, this little trend here. It was subtle, but the most important thing about this was that volumes was again on the increase as well. So it was this increase in volumes, and you might think, well, that doesn't look significant, but if I was to hide the other volumes, the future volumes, you can see actually the volumes aren't too bad, right? These are your average volumes, and it's rising, it's getting back above, and it cracks it. So I got in at 29.5 for this one as it cracks in anticipation of the break. And of course, the other break here is this horizontal, which I wasn't actually really anticipating, but you know what, when the volumes kicked in, it was like, right, I'll let it go. Had a target for 34. I really was targeting close to this horizontal here at 34. I didn't want to get greedy at 35. And I just want to take 33.5 as well as 34. I had an OCO order because I went for a run. I thought I'd better let this position go, set my stop losses, set an OCO order, got it at 33 and 32. So my 34 order didn't get hit, unfortunately, but I'm still happy with the trade that I got out of this one. So really, really clean setup. Despite the fact that the liquidity was quite thin, I guess you'd say, for considering the price movement, right? The volatility was there. When you think about it, it was moving up and down 10 percentage points like it was nothing. 28 to 31, like that's 10% in no time with little volume. So it acted surprisingly well considering the lack of liquidity. And this wasn't exactly a pump consolidate, so it's not like my traditional pump consolidate pump setup. Those days are kind of over. That's for a really strong bull market. Instead, it was like a pump, pullback, and it was more like a range rather than a consolidation. I wouldn't really have called it a consolidation. But if you paid attention to the book, no one was hitting the bid. It just wasn't like the people would be buying, lifting the ask, or rather lifting the offer. And then the bids just weren't really there. Like the bids weren't stacking behind it. So what you got was like a few hundred shares or a couple of thousand shares pushing the stock back down. And then you had people coming back up and again lifting the offer. So no one, and you can see by the volumes, right? The red volumes, even the small ones, like volumes were just hitting the offer. And it just felt like a nice little consolidation, or rather a range, if you will, gearing up for the afternoon. And unfortunately, it didn't really crack high as I thought it would, but still overall happy with the trade, happy with the decision-making process there. Everything went well with ATX for me. I think everything made sense at the time, provided the liquidity was so garbage. Now, whether that was a fluke or not, I'll let you guys judge that one. But that's pretty much it for today. Otherwise, I hope you guys are relaxing on your liquidity out there and scaling down on your size, because God, it is fucking garbage out there. Oh, until next time, guys, I'll catch you later.